Hello and welcome to this webinar. Today we have three fantastic panelists who will be discussing the recent trends and developments in global metals trading and optimization. In the last 18 months, we've all seen a lot of change with increased risk. However, these changes have also created a lot of opportunity, with global metals market expecting growth to about $3.5 trillion this year. Over the last several years, myself as well as my panelists have seen many businesses going through a digital transformation to take advantage of automation, big data, AI, etc., in order to be a lot more competitive. The impact of the last 18 months on the workforce, supply chain and operations, and the need for traceability has really forced other businesses now to start following suit. On the line today, we have David Kane, a partner at Baringa Partners. We have Dr. Gary Vasey, the partner and managing director at ComTech Advisory, and Ganesh Natarajan, managing director at Enuit Europe. All three of them have extensive experience in helping businesses with their digital transformation requirements. It's great to see you guys all once again. David, I'd like to start off with you. You've been involved in the digitalization of several businesses across the supply chain, especially in the areas of market and operational risk. What, in your opinion, has been the main drivers for this movement, and what steps do you think businesses should take if they are planning to move in this direction?
Thanks, Mark, and nice to see everyone. I think there are different drivers for different businesses, and we've seen a bit of an evolution on this front in recent years. I think the conversation started off perhaps being slightly technically led. Conversations like, what do we do with blockchain? Where can we use robotic process automation to enhance our processes and make things more efficient and perhaps remove some costs from our business? Then the conversation kind of starts to evolve into being sort of delivery led. How can we become more efficient as an IT organization, be more agile, perhaps incorporate DevOps into how we do things and get results from technology quicker, to being then more led by investment. So what do we do to maximize our return in the market? How can we make sure that we are on the front foot when it comes to digital, so we have a competitive edge over our competitors? And then it's now starting to develop more into, actually, we need to align our digital strategy to our commercial strategy, so that the digital elements of our business are enablers to drive more revenue, to potentially reduce cost, but ultimately to drive more profit within the business. And what we're seeing then from that perspective are companies making decisions around their digital agenda and their direction, which are driven towards better, more accurate data to provide more insight and better decision making, new market offerings in a particular area, and using digital tools to facilitate and accelerate that. But then also just looking at their core business and saying, how can we make things more efficient and improve? And if I think specifically about market risk and operational risk, well, what does that look like? Market risk, I think that there is a push towards some specific, let's say, detailed systems that can do more enhanced analytics around the market risk that metal traders face within the market. So trying to stress test their books more in a more detailed way, trying to model different scenarios and understand what that might mean. And that's been enhanced by the events of the last 12 months or so, where there have been some shocks to the market. So they've really pushed more into that route so that they can understand, well, if something like this happens again, then what does that mean for the position and exposure I have, and perhaps the risk limits, and how will they be stressed? And then from an operational risk perspective, we've certainly seen a bit of a push towards operational efficiency within trading businesses and the use of operational risk metrics more formally to drive that. If we think of the world of physical trading, for example, and the associated derivatives to manage risk around that, it's very much a paper-based world in the past, and still is to some extent in many ways. There's been a move towards digital, enhanced again by the events of the last 12 months, but actually the reports, metrics and KPIs that we're now seeing emerge around operational risk and becoming more prevalent are actually measuring how efficient people are in a much more coherent way, and then driving that behavior back into the business in order to make things more efficient. I think the last point I'd make around that is that my own view is that these operational risk metrics and digital tools and reporting, not necessarily there as a sort of stick to beat people with, but to have a conversation within the business to change behaviors and get people working together in a more coherent way. And it's the use of those digital tools, reports, and the data that brings that allows that conversation to happen in a structured way.
Thank you, David. I'll add a quick follow-up question on that. If a company is looking to move in that direction, what would you say are the best practices for a company to take, maybe the first 5 or 6 steps?
Yeah, I think it's worth starting kind of at the top. So starting to think about what digital means to you as an organization and linking that to your commercial strategy. There's no point in going off and just implementing digital tools and technology for the sake of doing something fun. It has to be linked to commercial outcomes. So really linking those two things together, and then thinking about, well, what are the priorities for us as a business in order to take advantage of the technology that is emerging and becoming available, and how do we build that around what's perhaps the heart of our organization from a systems perspective, whether it's the CTRM system that's in place for metals businesses. How do we link into that, and how do we make sure that it integrates in a seamless way so that we take full advantage of those areas? And I think from that you can then identify sort of what opportunities you have to maximize the impact of digital technology. And then that may be in the sort of front office, it might be forecasting, it might be something you do pre-trade, it might be something that you introduce to the back office to make something more slick, or it could be the risk management that you have around that, Mark.
Fantastic. Thank you, David. Gary, I'm going to move over to you. It seems that every time we have spoken over the last few months, you bring up the need for businesses to have complete traceability and guarantees of origin. You've also mentioned several times the need to have the ability to track and trace costs to not only optimize your business, but also optimization around suppliers. Could you explain why this trend seems to be picking up even more now?
Yeah, I think there's any number of reasons why that's the case. Traceability, of course, is very important from even a brand protection perspective. If there's something wrong with the end product, it's substandard or causes problems, then being able to track that back and fix the problem is very much related to protecting your brand. So at that very high level, there's a brand protection element. But being able to track the product back to source, I think, is becoming even more important with the increasing need to track carbon footprint. So I think in the future, not only will a transaction track costs and cost estimates through the supply chain, but it will also have to look at the carbon footprint of that transaction as well. And so therefore, any system that metals traders or producers might be using to move product from production to market is going to need to take into consideration traceability in a multiplicity of different ways. It is really all about the fact that we're dealing with physical things, physical product, physical materials, and that they have to be moved physically through a supply chain. And as David talked about operational risks, geopolitical risks, we saw just recently the ship blocking the Suez Canal and the implications and impacts that had on the market generally. But I do think David is right. I did want to volunteer a couple of comments on that. We are definitely seeing a movement across the industry, not just in metals, towards looking at more advanced analytical type packages or add-ons to CTRMs, or looking for CTRM solutions that have more advanced analytical capability. Because just recently with the work from home, there's been some changes in demand, there's been some changes in production. as a result of COVID and lockdowns and that kind of thing. And so historical pricing trends and historical trends in general have broken down a bit. And so people are moving to look at measuring risk in ways like stress testing, more sophisticated models, those kind of things that David mentioned. And this is certainly having implications. On the geopolitical risk perspective, it's all about operational risk, again, as David mentioned. Those operational risks can have a significant impact on your market risk, credit risk, liquidity risk, obviously. And therefore, I think we're going to see a drive to more event-driven risk management, where calculations are redone in real time or near real time, depending upon some event that's taken place in the market or as a result of the transaction. And a lot of that will mean, and the other side of this is workflow and approvals, because that's another aspect of managing risk, but it's also what you allude to that I talk about a lot, which is collaboration. So increasing collaboration between different departments within the same organization by utilizing better workflow and approvals, but also that can help with collaboration between the organization and its partners, whether that be insurers, bankers, shippers, agents, that kind of thing. And particularly with many people working in a home office environment, workflow and approvals becomes increasingly important in order just to make sure that the business is being managed effectively. I think one last aspect of all this that I might just pick up on is obviously ownership of metal inventory, or looking at ownership in general. And here, obviously, we've seen over the past few years some issues around confidence and who really owns things in warehouses, that kind of thing. And again, I think this is all wrapped up in looking at the supply chain, looking at workflow and approvals, looking at document management in different ways, and trying to manage those exposures and risks that are not just market and credit, but across the entire spectrum, from legal to liquidity to geopolitical, etc. So I hope I answered your question.
Yeah, Gary, thank you. I made a hell of a lot of notes, and it makes it difficult to put any specific questions to you. But what I'll do is just open up to either David or Ganesh. Do you guys have anything that you would like to add to that?
Go ahead, Dave. Go ahead, Dave. No problem.
Yeah, thanks, Mark, and Gary, a very coherent explanation there. Enjoyed listening to that. I guess a couple of points I'd pick up on. I fully agree. Collaboration and ways of collaboration is becoming far more important. I think the days of shouting across desks, whilst not gone, are clearly, we live in a different working environment right now, and I suspect that will continue for some time. In addition, the days of shared mailboxes, whilst I'm sure there's still many of them around, it's just not the most efficient way of doing things. And there are some great digital tools out there that can help that collaboration internally. And then that starts to expand out to externally. How do you deal with your counterparties and banks from a trading perspective? So we start seeing things in the market where people are looking at providing online portals to their counterparties where they can place an order, then that order will be filled, and it integrates with the CTRM to actually make sure that that is captured as a trade. Obviously needs to be validated. And all of these things I think are going to emerge further in the coming years as working practices change a little, things do become more digital. And perhaps move where some industries have been for a number of years already.
I also think, David, that speaks to the user interface side of systems as well, in the sense that with more data, with greater speed of things happening, with people working from a home environment, the ability to really get into the system in a much more intuitive way and really drill down into the information that they're looking for, and be able to communicate that via instantly, via messaging, email, or whatever, is going to become very important. And I think that user interface is going to be an area. Well, I think user interface has been an area that's been underlooked at, quite frankly, in terms of innovation. And I do kind of get interested when I see articles that sound very futuristic, I suppose, but augmented reality and that kind of virtual reality. But we're really going to have to start looking at these kind of tools and technologies, because the user interface is going to become a bottleneck to making further progress if we're not careful.
Absolutely. I would like to add some thoughts, right? I think it's great to hear Gary and David's view on this, right? If I take a step back and do a little bit more comparison between a steel and a metal industry towards other commodities industry like an oil or energy and stuff, I always thought, and it's kind of to an extent it is true also, the system sophistication or digital sophistication is a little bit much better on the energy side or the oil trading side when compared to metals and steels. But what is really resonating, what we are hearing from Enuit side, plus also from a market perspective, is no more that old way of doing things, telephones and fax machines and paper moving around. The very traditional way of looking at the metals trading business is completely long gone right now. So there are three words we continue to hear right now in terms of metals trading, right? One is e-shop. People don't stop using the word warehousing anymore. People are talking about e-shop, and people are talking about marketplaces. People are talking about trading systems. Even if you just kind of box in a CTRM system into a trading system platform, but all three things have to connect together. So you have a market to serve, you have a supplier, you have a vendor to service, you are actually taking your material to the marketplace, you are trading on it, you are hedging it. So your collaboration digital, as Gary and Dave said, it has to give a purpose, right? End of the day, you have to connect to your stock, warehouse management. You have to really connect to your marketplaces, which is your suppliers, customers, any of your counterparties who is actually a part of your supply chain, and your trading system. All of these have to work together to solve one problem. The problem is actually connectivity and collaboration. End of the day, if I'm buying something or selling something, all I'm interested is not even, I have to record a trade of what I do business with Gary and Dave. That's a given, right? That's like, it has to be something which I have to do it anyways. But I think it's beyond right now. I think the key thing is when people are talking about digitalization, synonymously what they're saying is I want to collaborate, and I want to connect my existing systems, and I want to convert all my data into insights. That's what they literally means, right? To enhance my supply and trading business or my trading business. I think that enhancement of connecting my suppliers, vendors, and establish connectivity, I would just say it is actually resonating a lot on the metals market in the last few years, because they've been almost behind the curve for a long time. And when they want to come out and then start doing things, they're actually taking digitalization much more seriously than the rest of the other commodity sectors. That's what I'm just seeing, right? And I think I cannot ask for a better a keyword, which Gary talked about in terms of workflows, right? Previously, it used to be just operational workflows. Who is actually putting in the trade? Who is approving it? Right now, it's much beyond that. Basically, as this remote working has told, right? I'm not saying no CTRM system is going to actually handle all the problems, everything you're doing from an origination all the way to settlement. At the same time, it's very important to actually have a platforms which can talk to each other. So we have clients who want to actually choose a CTRM system and then say, great, Ganesh, I want to actually have your CTRM systems flushing all your risk data into my, a data warehousing. Or I would like to actually have an integrated with my DocuSign or a e-signature platform, because most of my suppliers are sitting in Asia Pacific, and then I have no way of faxing them anymore because nobody is in office. So people have started thinking in terms of connected systems and connected architecture, and they are happy to bring in complementary products and solutions together rather than building it out, right? I think that's where the digitalization really is evolving in my perspective, right? And just want to share some of my views with David and Gary's. When people talk about connectivity and collaboration, this is what literally practically means. A system talking to the marketplace and also actually connecting your stock and inventory, taking the entire data out so that you can actually sell better, right? That's pretty much, or transact better with the marketplace.
Yeah, I see it as an ecosystem, Ganesh.
Exactly.
An ecosystem of digital tools, which often the CTRM is at the heart of that, and the key
Correct.
there is that ease of integration across different products that deliver value to the organization.
Correct.
Well, one other point to touch on, just to build on Gary's note earlier, I think one of the biggest disruptive factors of change across commodities, but also in metals, and metals are part of the solution for this in many ways, is the transparency around carbon emissions data with trading. And Gary, I know we've discussed this previously, Ganesh, me and you too.
Yes.
And I fully agree that's just going to be a real factor in first of all, liberating that data, understanding that data in order to make decisions on how trading should be carried out, but also to report to financing banks and their counterparties. And I think there's three angles for me. One is the sort of carbon accounting, understanding the underlying data associated with your own emissions, both from assets that you may own and the value chain that you are trading across. There's one around sort of the long-term outlook, particularly for asset-heavy businesses who might trade, where they need to look really across the next 30 years and their transition towards net zero and what that means for them as an organization and what that means for those assets. And then the last area I'd touch on with this is new business opportunities and how digital can enable that, whether it's moving into different area of trading, whether it's the carbon markets and how to utilize those in the future as they become more liquid. Digital and data is going to be key to all three of those particular elements, and that's going to be a huge disruptive change, in my opinion, in the next few years.
I completely agree, right? On one of our current clients we are working with, we are actually investing a lot of capabilities on guarantees of origin and emissions. And then previously it used to be just like, Ganesh, I would like to capture my emission trades. Now people want to evaluate inventory, right? So they would like to understand the inventory valuation of the emissions. They would like to track the emissions, right? And when we are talking about 2-3 years before, when the REACH regulations came into the picture, it's talking about the chemical composition. Right now, it is not only regulation; it is also important to, as David said, it's also important to actually manage your carbon accounting across your value chain. For that, you need to know that where is that being injected? What is your current carbon accounting? Are you actually doing things right? Not just from a reporting perspective, but overall, as a conscious business, how are you actually managing your carbon portfolio across your trading value chain? I think that also needs a lot of thinking. It is not just basically, oh, I'm going to capture my carbon trades in the system and then I'm going to report it. I think that era is again gone. That was like 10 years before, where people are talking about CO2 emissions. EU was coming out. Even that era is gone. Now we have to manage inventories. We have to manage guarantees of origin. We just need to stamp every piece of material, where it is originated from, what was its carbon value, and are you still within the limit? So there is a traceability, which is again back to Gary's point, originates across the supply chain. So the systems have to evolve to not to just only be physical logistics component. We just have to start treating carbon also like a very serious stuff. I think I heard one of the big players recently opened up a pure carbon trading desk, just mainly across the value chain to complement their wider trading activities. It was just a couple of weeks before I just saw the news, where people are investing heavily on the carbon desk and trying to actually ask more out of their systems and the IT investments to support their carbon emission goals. I think that's one of the trends we are seeing right now, not only as Enuit, but as an industry.
Ganesh, can I jump in here?
Sure.
If we're looking at this from a CTRM perspective specifically, during this conversation, we discussed that let's focus on metal companies for now. They don't just require a system that can manage their trades and risk, but can also manage activities like blending, logistics, like we've spoken about, inventory, workflow, etc. How have Enuit been helping businesses to achieve these goals, especially, I guess, given that most of these activities are out of the scope of a traditional CTRM system?
I think the traditional CTRM system, the lines have been blurred between a very, very long time, right? To start with, right? I think it's one of the most interesting topics even Gary and David can resonate, right? From a CTRM perspective, I think the market towards especially is already moved on to the commodity management perspective, right? So people want to look at the trading angle. They also want to look at your supply chain angle, right? So most of the trading companies currently, what they're looking at is they will have an international trading arm, have a domestic trading arm, and kind of start looking at more of a commodity management, supply chain based, right? In that, when you're looking at the supply chain based, you have to have inventory, logistical capabilities in the system to actually manage your international cargo, the traditional way of vessel movements, barges, rail stuff. And also even people are talking about domestic way of, okay, I'm actually supplying a material or tons of metals in a truck, right? You're talking about logistics across very localized logistics as well as international logistics. That definitely Enuit as a product can definitely do. And we are also actually investing a lot from a product standpoint to actually try to blur the line as fast as we can between commodities trading and commodities management. One of the areas we are investing is basically activity-based accounting. What is mean by that is one of the main thing, especially on not only on the metals and steels business, the metal trading business is it's very paperwork driven. What I mean by that is anything which you do in terms of your trade capture, documentation management, and you're talking about the supply chain, how the bill of lading, where the material is, port fees. There's a lot more activity which drives your total settlement value or your P&L, right? So Enuit actually is taking the right steps, and we have kind of launched our next version of product called Entrade Unite, which is focused mainly towards commodity management, where the entire product is driven around activity-based accounting. Whatever is happening towards your life cycle of your trade, life cycle of your deal or your contract capture is absolutely turned into a journal entry, which actually enables to have a smoother handshake, accurate settlement calculations, and towards your journal entry. That is key, right? So not just only blending logistics and workflows, which is actually a core part of our product, but also try to drive your deal lifecycle activities towards your settlement and accounting activities absolutely is crucial. So Enuit as a company, we are taking a good step. Entrade as a product, we are investing a lot in trying to move into this commodity management space, or we have already moved into the commodity management space, but the lines are getting blurred. Right now, I don't even understand sometimes whether it's a trading ask or a commodity management ask. The lines have been a lot of blurred. When we are getting a new inquiries from people, people are asking the same questions from a trading and a supply chain angle. There is no more difference. 10 years before, there's a clear difference between these two. Right now, not only in the metals industry, we don't have the difference anymore. Even in the oil, petrochemical space, metal space, I think trading and supply chain is all come together completely. And I think systems also have to come together to blur the line as fast as possible.
Thanks, Ganesh. Gary, I'm going to bring this over to you since you've extensively covered commodity management systems over the last several years. One of the things that Dave mentioned right at the beginning when we're talking about, moving towards digitalization is kind of understanding what your business needs. If we look at commodity management systems, or at least vendors that supply commodity management systems and companies that say they supply commodity management systems, what in your opinion should companies look out for when they're kind of in the market looking for something like this?
Well, for us, CTRM software is really defined as trade management, fairly basic risk reporting, and that's what CTRM is for us. We then talk about ERP for commodities, which is the actual accounting side that we've alluded to, and commodity management we see as the combination of both. And I think that we are in a commodity management era by and large. It doesn't mean to say that people don't need CTRMs, because obviously there are companies that just need CTRMs. And there are ways to it. People want to integrate a CTRM with an ERP system that has a commodities capability. But I think that if I'm looking at CTRM versus commodity management, I don't expect to see things like, detailed inventory management, workforce management, customer relationship management. I don't expect much of a logistics capability necessarily. I certainly don't expect all forms of transport to be properly looked after. The big area though often is the accounting interface or integration with accounting, and this is where I think if you've built a commodity management solution and you've gone down the accounting route, then you have kind of solved the problem for your own internal solution that you're building. And if you have to integrate or interface with an external accounting system, you've already solved the problem of the right level of granularity and the right kind of data to transfer over to the accounting side from the trade transaction side. And that helps to solve a problem which has been one of the big ugly sores in the business for many, many years, to be honest. The other thing I'd say about CTRM is we kind of expect to see the price formula capability and flexibility in a CTRM solution, but that has to extend through into the downstream solution as well, because with metals you might be receiving assays which impact the invoice, and you might be producing multiple different invoices as the metals move through the supply chain to the final point of delivery. So I think that if I'm looking at sort of defining this, I think that if you're just doing really trading, speculative trading, or you're a trading centric merchant type entity, you can probably get away with a sort of CTRM solution. But if you've got any responsibility of moving and managing the commodities through the supply chain, then we're talking commodities management. The problem is that those vendors that come at it from a traditional ERP commodities management perspective often lack a lot of the functionality that the trading people and the risk people require. Simple things like book structure for reporting, simple things like the pricing and well, it's not simple, but the pricing and the formulas, that being able to handle the underlying physical aspects of a specific commodity that have implications for pricing and valuation, for example.
Absolutely.
So those are some of the issues. I'll let the other guys jump in because I've been hogging it. But we have been working on trying to push this definition of commodity management, CTRM and ERP for commodities for about the last 5 or 6 years, with some success. But unfortunately, vendors, often being vendors, they claim they jump on the buzzword, they claim they have commodity management, but in reality, if you drill down into it, they really don't. And this means that it becomes a bit of muddy waters, because even though an analyst like ourselves are trying to put like a definition around things so people can understand and communicate, other people are trying to muddy the waters because they want to blur the edges of what they actually have for the marketplace, so to speak. Make sense?
Yeah, perfect. Thank you. I'll move a bit aside from this one, and this is a question mostly for David and Ganesh, I guess. David, in your experience, I guess, with all of the transformations that you've been involved in, I guess you see a lot of requirements for niche tools that trading companies use quite often to integrate with other systems. In your experience, has this been something that has been easy, difficult? Can you just give me some feedback on that specifically?
Yeah, Mark, I think variable is probably the answer to that question. You have some tools that are just very easy to integrate with other systems and have this sort of technical capability to naturally do that. Often that will be sort of risk engines that are used, that need data from other places in order to actually process the output that they require. From a reporting perspective would be one good example. It may be something that kind of sits within a particular value chain, and maybe it's a sort of electronic letter of credit type system. Again, just needs data from other places in order to deliver what's required. Often those systems can be relatively easy to integrate with. Others can be more difficult, and it depends sometimes on the complexity of the interface. So if you think about, I think Gary mentioned sort of the tipping point between trading system and accounting system, that's often an area which is challenging to integrate, because there's some logic involved in how you map data and process data from one system to the other in order to make an accounts posting. Where do you leave that logic? Do you leave it in the accounting system, pass the data across, and then do something with it? Do you do it at the trading system end, or do you do it in the middle? And there's no right or wrong answer to that. It really depends on the nature of your infrastructure and the systems that you have, but there's complexity involved. Yeah, so to come back to your question, I think we will see more and more requirement for integration as more digital tools emerge, and also as traders they want to monetize their data, right? They've got huge, vast stores of data, which is traditionally been there as a sort of retrospective capture of a particular trade that's flowed through their systems and their business. But now they want to take that data, analyze it, do something with it, and make better decisions on the basis of that data. It's proprietary, it's theirs, so they should be doing that. And the digital tools that will sit around this, either things that they buy off the shelf in the market, or you see teams of data scientists popping up in trading organizations now, that they will drive the data themselves internally, because actually they want quite close ownership of that, and it's quite sensitive information. So we'll see a lot more of that in the future.
Great, thank you, David. Ganesh, I'll hand it over to you, being the solution provider on this call. How does Entrate, I guess, handle these multiple new integration points, new tools that are coming in?
No, I think David and Gary kind of summarized it, especially Dave kind of said about how do you write. The main thing is when you're talking about connectedness and digital strategy, right? It's all boiled down to three simple common sense in my mind, at least. One is like, can I interrogate the data in my trading systems and my business systems? That's the first question. So when I say if I can interrogate and understand the data in a meaningful format, it'll be easy for us to expose it outside to do whatever you want to do, right? And David said there is a lot of data scientists and data developers rocking up to the trading firms 5 years before you actually see, hey, do you know this package? That's kind of a hiring trend, right? Do you know this package? I'm looking for this kind of a packaged developer or a technical analyst or a business analyst. You don't have that kind of jobs anymore. You basically want people to get the data out of any system. They are almost becoming the product agnostic. So the trading companies are almost started treating CTRM systems as an abstract layer. And that abstract layer is, I have a system which actually records all my trades, which is used and looked at for audit purposes, risk purposes, but I'm just looking for much more. What is the much more boils down to three things. Can I interrogate my system, my trading system and my business system? How easy is it for me to actually get the data in and out of the system? And how can I actually integrate with the management dashboard or BA tools or reporting so that I can move the data around within my enterprise, right? So if you answer the interrogation, data extraction, and movement of data, you kind of have your pseudo blueprint for digitalization. So Enuit, from a Entrate standpoint, of a product Entrate standpoint, it's actually very much positioned to do that for two reasons. One, this comes from my personal experience, not just only working for Enuit. I worked with a couple of other systems before. I think Enuit is my fifth business or CTRM system I've actually touched and implemented. If we take a step back, it's very, very key. Sometimes the CTRM systems can have a greatest UI, but once the data goes in, it almost behaves like a black box, right? There's no point in actually having a system like that, right? And Enuit doesn't do that. First thing is we actually let our users, our clients interrogate the data within the system. We expose RESTful APIs across all our applications where you can actually take the risk results. We have our VAR models, and I think David picked about risk analytics as a capability at the start of the conversation. We basically expose the data out of the system from an XML, Excel format, API format, right? So once you open the data like that, it becomes much more easy because the more and more CTRMs goes abstract, the more and more data comes out as an outward flow. It's very easy for the enterprises to start navigating and using the data. So from an architectural standpoint, we are absolutely in the right place because we don't hide any data which goes inside Entrate. We expose everything we can to support people to make the right decisions. And that connectedness is actually putting us in the right stream where when people are talking about digital strategy, they don't come back and just look for CTRM system. CTRM system is just a foundation of the digital strategy. So, but to have a good architecture, you become the foundation for your client or your prospect, right? That's where Enuit is actually playing our product strategy is completely the backbone of what we do. I think we are in the right place.
Thank you, Ganesh. All right, well, I think we'll begin to wrap up now. So I will ask the panelists if you guys have anything else to add or comment on before we start to wrap up here.
Well, the only thing I will say is I think we're in an era of unprecedented change. And so agility and flexibility have become really not just buzzwords, but key characteristics of systems that are absolutely required because things are shifting and changing so fast in so many different ways. We've touched on many of them here, but in my role as an analyst, I mean, I've been talking just recently to a number of startup firms that are doing satellite imagery and regulatory reporting of sanctioned ships and all this kind of thing, and this whole the whole commodity arena is becoming more and more complex and changing faster and faster all the time, and so really agility, flexibility are absolutely key in my opinion moving forward.
Right. All right. Well, thank you, gentlemen, for your time today. And I guess thank you to our attendees for joining. If you do have any specific questions for the panel or you'd like to reach out directly, please feel free to email marketing@enuit.com. We'll help you to facilitate a call further. And once again, Gary, David, Ganesh, thank you very much for your time. And I wish you guys a good rest of the day.
As it was
Cheers,
very, very
you.
insightful to hear from David and Gary. And then Gary agrees with me a lot on some of the systems are very, very closed. I think it's great to have the conversation, guys. I appreciate it.
Thanks everyone.
Bye-bye.
Cheers. Bye.